Well, markets down big time on Tuesday. We've got international headwinds out there and health stocks have been really copping it. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. All right, so the market dropped 2% on Tuesday. Was it Brexit, Paul?
Look, entirely Brexit. I mean, with the benefit of a long weekend, we missed Friday, we missed Monday, and we walked in and the European market has lost about 5%. Not so bad in the
Asians
US.
copped on a Monday.
Yeah, and
they ignored the Queen's birthday.
We had to make up. I thought our loss yesterday of about 2.1% wasn't too bad. I thought it opened 100 points down. It only opened about 70 or 80 points down. And I thought we might be looking at a lot worse. So although the headlines might be screaming this morning, Peter, I think the Aussie market did all right yesterday.
Yeah, and materials were the worst sector on Wall Street. So I always thought we're going to have a pretty ordinary day. I guess the important point is this the start of that expected sell-off of the market after it's gone up about 14% or so since early February?
Look, it's very hard. Look, there's lots of uncertainty out there now, and I think we're going to see a tough market. We've been talking about it for a while. Brexit's not till next Thursday, but we've got the Fed, as you know, later this week, and then it'll be the July meeting. We've got Donald Trump saying all crazy things. We've got the shooting in Orlando. I think we're going to go into that period of just greater uncertainty until some of these events roll through. So, look, I think the market's got some more tough days ahead.
But Paul, do you think a lot of this is because there is like a reaction to political correctness and all these sorts of things, which are actually creating opportunities for extremists on the right-wing end of politics?
Look, I think so. I mean, also locally, I mean, there's no news. I mean, the companies are now sort of into their June 30 mode, so there's very little company news coming out. Look, election is sort of taken over all the sort of headlines of anything else.
And that's boring.
That's boring.
Shockingly
and,
boring.
I mean, so it's a vacuum. We had a good run up.
It's a vacuum that Donald Trump can fill.
It's a vacuum that Donald
Don't you hang out for something stupid that guy's going to say.
Absolutely. I mean, we should move off Donald Trump. But look, we are into that sort of almost no news, so things happening offshore will get greater gravitas over here.
Okay, well, let's go and talk about another headwind, something that really quite shocked me in the last week. A gentleman from BT was saying that the Aussie dollar could go as low as 40 US cents. What do you reckon, Paul?
I reckon that's a huge call. I mean, I think the reason why the Aussie is doing a lot of work here around about 73, 74 cents is 70 cents is about its natural level. I think everyone's from the Reserve Bank down has said the long run number for the Aussie is about 70 cents. Yeah. Look, we might test the 60s and have a dip down, test it, but I can't see it at 40 cents. Look, what he's forecasting commodity prices, he must be mega bearish on commodities.
And he's also
on world growth.
Yeah, he's making this argument. He believes that we're going to keep pushing interest rates down, and I don't think we are. I think that very most there would be one more cut, and I don't think the Reserve Bank wants to cut.
No, I think the Reserve Bank all along has showed an unwillingness to cut. And even the way it changed its last statement, it's sort of got its hands almost dealt because every other government apart from the US is cutting and everyone else is trying to weaken their currency, and the Reserve Bank is watching the Aussie dollar sort of hold there at 70 cents and go back up. Yeah. And was worrying about it going back over 80 cents. So I think its hand was almost dealt for it. But look, I don't think it wants to cut, and it's going to fight it.
I said this guy, I won't name him because I'm going to be rude here, but I said this guy is either a genius or a dope. And I don't think there's going to be a genius.
Well, you don't get too much notice for making the call the other direction. So, look, he's either going to be a hero or, as you say, a dope, and we won't be talking about him again.
No, exactly right. Well, I might bring it up if we don't get near 40 cents. Now, finally, I want to talk about health stocks. They were clobbered last week, individually. Some of the loved ones were, but you also talked about Medibank.
Well, I did. I mean, I think just on the market, best performing sector in May and started off in June okay. But look, they've got a little bit overvalued, so I don't think it's any surprise to see CSL drop.
Is the buying opportunity?
Look, I think it's a little early. I mean, CSL dropped 3.75% yesterday is no surprise. It's had a great run up. I wrote last week about Medibank. Look, Medibank is one of those defensive stocks, so it's not going to get too badly clobbered, but I just can't see it going up with the market.
What's its yield, Paul? Where we work
Well, it's only yielding about 3.4%, so it's hardly a yield stock. The thing I draw people's attention about Medibank, it's not a growth stock, right? It's a cost-out story. Medibank has lost market share. Its market share was over 30%.
It's not a Ramsay waiting to happen.
And it's under 28% today. So Medibank is a business going backwards, notwithstanding how they like to paint it. What it has done really well is take out costs. It's a really interesting story. Why the health minister approved those health insurance premium increases in April, given what's happened to the profitability of the of the insurance industry, I think is another story for another day. So she needs to be a little more careful next time, I think.
You seem to be mad about that, Paul.
I am. Well, I could get really mad about that, but look, I don't want to get political at this late stage.
Very
in the
good
election.
idea. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.